Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a Chief Executive Officer of Treasury Consulting LLP. And today we are going to speak about very interesting topic, which is Treasury Stock. As you know that a lot of activity which is happening in the market, and majority of the and a lot of buybacks which are also happening in the market, like companies are coming up and doing the buyback. So the purpose of this is to give you is to abreast you from two things which is happening in the market. Number one, which is which is by Microsoft. Like, as you very well aware about that, Microsoft is doing buyback of approximately $40 billion of share price, which in my personal opinion is not good. But of course they have to take the final call. We are no one to take the final call. And if you carefully see that some other big companies are interested in doing the buyback. In fact, I was I was reviewing the annual report of the Deutsche Bank, and I got to know that Deutsche Bank is also doing billions. Their board also approved billions of dollars of the buyback by 2020, and majority of this buyback to be done either direct in the market or through any derivatives. Over the period we would be launching more we would be launching more videos pertaining to that buyback. But sitting today, we are evaluating what do you mean by treasury stock. So what happened now? Here we'll take a practical example of Microsoft. I'll shortly refer MSFT. Microsoft is having a requisite capital structure, which of course Microsoft is having, and Microsoft wanted to do the buyback of $14 billion of the stocks from the market. Now this Microsoft is doing from the open market, and they are taking the help of the investment banker. Now which investment banker they are taking? Assuming they are taking the help of say Goldman Sachs. Simple, we are taking a simple example. And assuming the per share Microsoft has given a target rate of $40. We are simply assuming. So the total shares, that is going to be 1 billion shares. So what I am going to do, I am going to assume a case that Microsoft is spending approximately $40 billion here, and this $40 billion they are going to be equipped. They are going to buy their stocks in the market. For that they hired international investment banker whose name is Goldman Sachs, and Goldman Sachs, the target price which they put is approximately 40. So in this the total share which they're going to buy is 1 billion. Assuming the total share capital issued capital is 10 billion shares. Assume the total issued capital by Microsoft is 10 billion shares, and out of which they are acquiring 1 billion. Now there could be several reasons behind that. We can have 200 reasons behind that. Now what 200 reasons? Majority of these reasons are accounting. Example, we need to return cash to shareholders. Shareholders are demanding that you bought Skype $12.5 billion. Then you bought one or two companies in $1 billion, I cannot remember. Then you bought LinkedIn, $26 billion. So you spend a lot of money in doing acquisition, but at the end there is not a substantial return which came to Microsoft. So what they are doing, they want return to shareholders. They want shares to be buyback so that they will get their money, because they believe that currently the price is highest, so they can do. So one of the options is could be return to shareholders. Another possible reason could be you wanted to increase the metrics of your financial statement. This is very key. Now what do you mean by metrics here is that you are not happy the way you are reporting. Example, return to equity, return to capital employed, return to equity, return to capital employed, and there are hundreds of matrices we can have. There are hundreds of matrices we can have. So what you are doing, you wanted to improve one of the matrices. And what are these matrices? Let me write here. You wanted to improve matrices like return on equity, return on capital employed, and others. Say EBITDA multiple and variety of multiples and respective. Now another you wanted to do, you are sending a signal in the market, which is third, that your share is undervalued. So you are sending a signal that your shares are undervalued. Well, I strongly disagree with this. There is a strategic reason to it. I strongly disagree with this because I always tend to believe that rather than sparing the money on these so-called, I would say, buying of share price, you should spend the more money in doing strategic acquisitions. This is my personal opinion, and I strongly tend to believe that you should not be worried about whether your share price is undervalued or overvalued, because if you are doing a good job, you are making a good product, then you will surely get the people. You will, maybe little late, little delay, today, tomorrow, or whatever time, but you will get the people. So I am strongly disagree with the fact that you are using the treasury stock only because you wanted to you are thinking that your shares are undervalued. Now another is you wanted to offset shares which you issued in the form of ESOP and warrants. You know the ESOP, it is employee stock option plans. You know the warrants. Warrants are the call options given to the employees so that they have a right to buy a specified share at a specified place. Now warrants are issued to top short people, and they are generally nowadays there is a fashion in the market that they are issued to your equity. They are issued to investment bankers also as their fees. So you wanted to offset the total amount of shares, which basically if you issue ESOP or warrants, then your authorized capital would increase, and if your authorized capital would increase, then in that sense it would be little difficult because your authorized capital increase, and you can only decrease it if you come in the market and you do the buyback, but here probability is always very low. Secondly, you wanted to save yourself from hostile takeovers and all such M&A strategies. So you wanted to save yourself from hostile takeover and other kind of M&A strategies, and very important that how you would do this. So once you have a share capital of 40 billion shares, and out of which you are buying 1 billion shares, now what would you term this 1 billion share? This 1 billion share would be termed as a treasury stock. And how you are going to do this treasury stock? You are left with two options in treasury stock. Number one, you can either keep them intact in your books for a longer period of time, or you can cancel them. But if you keep them intact in their books, then there are certain accountings thing which would come. Example, example, the how you were going to declare the dividend, how you are going to do the accounting of the same, how the valuation would come. So there are a lot of things which would come. Other side, what would happen? Other side, what would happen? So you can cancel them. So rather than retaining, you can cancel them, which is more preferable. But there is an issue in cancellation of issue regarding the cancellation of treasury stock. The issue is that once cancelled, it cannot be it cannot be reissued. So same treasury stocks cannot be reissued, but you can reissue another treasury stock. You can increase the size of your issued capital, but these treasury stocks which you bought back cannot be reissued. Right, so you're left with only two options how you can go. Either you can retain them or you can cancel them. But out of $40 billion, the 1 billion you bought, that 1 billion is known as treasury stock, and that you clearly have to segregate in your books, which is nothing but the buyback. 99% of the time, if you go and you will see that, you will get to know that people are sometimes keeping them in the books for a longer period of the time. Sometimes people are just discarding them. Sometimes they are doing the both. So there are a lot of reasons behind the same. But yes, it does impact, it does increase your EPS. That is for sure. It does increase your EPS, because treasury stocks cannot come as a denominator of the EPS, because the denominator of the EPS would be number of outstanding equity shares plus ESOP plus warrants plus convertibles, if any. So ESOP plus warrants plus convertible. So they are not going to decrease your EPS, they are going to increase their EPS, assuming that in your EPS, assuming in your EPS main thing, which is denominator, which is which is basically how much net income you are earning, that is something which is not reducing because of operational reason, else your EPS would surely be increased. This is how treasury stocks will work. Now, what are the various ways? We can do the treasury stock? This is how we can do the treasury stock. Now, Goldman Sachs left with three options. Option number one, they can do the forward purchase. I will first write, then I explain. Option number two, sorry, I will write repurchase here. They can do forward repurchase, spot repurchase second, and they can do the ASR. ASR stand for accelerated share repurchase. In a forward, what you will do, you will go and you will do the contract with the people, and when the appropriate time will come, you will buy them. In spot, which 99% people are doing, you go into the market and you buy them. Third, in accelerated share repurchase, what you do, accelerated share repurchase is a very difficult transaction, and we are making sure we are thinking to have a dedicated video of that, but still, by the time if it is not coming, accelerated share repurchase, a transaction is to be executed between a reporting entity, which is Microsoft, and an investment bank, which is JP Morgan, whereby a reporting entity repurchase a large of the shares at a purchase determined by the average price over the period of the time. But in accelerated share repurchase, there is a very good thing. The good thing is that that initially your EPS will surely increase. Initially your EPS will surely increase, there is no doubt about that, but in the longer tenor your EPS might decrease also. Decrease in the sense that there is an additional payment which you need to pay to the people, to the investment banker. Henceforth, this is known as accelerated share repurchase, and believe me, this is very fancy. Yes, recently I heard that Wipro bought back, I think, 2,500 crores of bonds, and in which majority of the stuff was accelerated share repurchase. Fourth is return put options, in which you buy your stocks, and this is known as sell put. So how this would work? Here you would have investors, and here is Goldman, here is Microsoft. So he is buy put and he is sell put. He is having right to sell. He is having obligation. He is having obligation to buy, and there is a premium which he needed to pay. Premium to Goldman Sachs. That is something which they need to take a call at what rate they are buying, because sometimes, because here you left with three options. One is, in fact, five. One is in the money, at the money, and out of the money. In the money, which further divided into two parts, in the money and deep in the money, and out of the money would further divided into three parts, deep out of the money and out of the money. So this is how you are going to do the treasury stock. Treasury stock is having a detailed explanation how you are going to increase, how you are going to pay the dividends, how you are going to cancel it, and so there are a lot of things which we need to consider here. But this was the overall understanding of the treasury stock. Before winding up, let me just give you a refresh that Microsoft wanted to spend another $40 billion in terms of buying own shares, and assuming the target price has been decided as 40, so the total number of shares would be $1 billion. There could be following reasons before Microsoft for doing that. They wanted to return to their shareholders. They wanted to improve the matrices like return on equity, return on capital employees, EBITDA multiple. They are sending a signal to their shareholders that the share prices are undervalued. But we slightly disagree with this, that sitting today when the profitability margin is almost zero for majority of the companies, you are just struggling to make any margin. How can you spend $40 billion only to justify that your share price are low or less? But of course there are thoughts, and thoughts cannot be disregarded. So we need to see that it could be one of the thought that you are seriously concerned about your share price. Last but not the last, you are offsetting the total amount of issuance, and that issuance would be happen from ESOP and warrants. ESOP stands for Employee Stock Option Plan, and warrants stands for the warrants are the call options which are issued to the employees. Now please note carefully, both ESOP and warrants are generally issued on restricted stock. So when you don't have a voting right, it might possible that you will find some companies who issue both ESOP and warrants on a non-restricted stock. So there is no guarantee of that. You cannot issue the non-restricted stock, right? And then you will left with two option of that. The one option would be yours. One option would be either you can retain them, and one option would be you can cancel them. So treasury stock can be what are the ways for the Goldman Sachs to do. He can do the forward purchase, of course, wherein he would sign an agreement with the party that this party would pay, this party would sell their shares and Goldman would buy. The agreed price has already been decided by Microsoft, which is $40. Another option could be they can do spot repurchase, right? And third, last but not the least, the options would be ASR, which is known as accelerated share repurchase, and written put option. Written put option would be like this: you have investors here and you have Microsoft on the other side. In between you would have a Goldman Sachs. The premium which Goldman Sachs need to decide, example, sometimes the premium would be in the money, at the money, out of the money. In the money would further divided into two parts. You would have in the money and deep in the money. Out of the money would further divided into two parts. You have deep out of the money and out of the money. With this, we would like to thank you very much for your time, and this was an introduction about the treasury stock. Soon we are going to create another videos on the treasury stock. In fact, we are also planning a very good video on this derivatives valuation adjustment. So we thank you for that and have a great day. You know our contact details. Our contact details is Treasury Consulting LLP @gmail.com. My mobile number is 9899242978. My Skype contact is Rahul5327. So we thank you very much and hope to see you soon. Have a great day ahead. This is Rahul Magan from Treasury Consulting.